Hey everyone, welcome to this week's training. We just wrapped it up. In this session, we dived into our counter trend signals. So TrendForce is all about trading with trend, but often when price is starting to reverse and get potentially back on trend on those higher time frames, we will get counter trend signals on our lower time frames that can be very powerful entries. So Dad went into a whole lot of detail, talked a lot about volume as well, like the POC we covered last week, those VALs and VAHs, very key levels to understand when we're in maybe times of low volume, which you don't want to be trading in, and times of high volume. So buckle up, enjoy the session, and we'll see you on the inside. All right, welcome everyone. Tuesday night training. We are here, and tonight's going to be a goodie because we all know that we're getting into the counter trend signals. So TrendForce is all about trading with trend, and sometimes on lower time frames we see things reverse and we want to know if it's safe to get in. So before I invite Dad to dive into that, some of you may have noticed by now that the footage from our live event is up. It's been edited. It took me 3 weeks and it is live. So it's not on YouTube yet. I'll stick up there eventually, but if you want to find it, please go to our TrendForce Facebook group and you'll be able to find the whole recording in there. Loads of you are featured in that video. Go watch the live event, drop a comment on it, and tag someone that you know needs to see it. If there's anyone in your surrounding friendship circles and networks, you can invite as many people as you like into our group. There's about 2,500 people in there because we've been doing this for a few years. So anyone can get into that group and see all the ins and outs of what we have. I post some of the recordings in there from nights like tonight, and obviously our live events. That's where we advertise them if they're open to the public. So feel free to get in there and invite some friends and enjoy the recording, especially if you missed it and couldn't be in the room. It's obviously the big reveal of version 4 for the first time. Plus, I opened up the night by going through some of the key elements of the 18.6 year cycle, which include, the big turnaround that we're experiencing in the property markets and things like that are going to eventually shuffle around into what I believe will be something similar to what we experienced 18 odd years ago, almost 18.6 years ago in the GFC, so the global financial crisis. So go enjoy that. And in the meantime, let's rip into this evening. So tonight, counter trend signals. I know Dad has got a whole ton to share with us. So without further ado, Dad, I'm going to invite you to jump on and let's rip into it.
Yep, well, here I am. Welcome, everyone. Thanks for joining us. Always appreciate those who invest in training. All right, without training, you're probably not going to be successful. So thanks for signing in, joining up. You've made a sacrifice. You've given up an evening to learn some more. So it is all about counter trend signals tonight. So hopefully you will learn something. But first, I want to say, I really take the coding part really, really seriously. I just realized, I've just been thinking in the last week or two, it's a massive responsibility creating an indicator, where people are risking their precious hard-earned money on. So I don't take it very lightly. So, I often go through two emotions. I feel an immense sense of joy when people post pictures of winning trades, but also I feel the pain of those who may be going through a rough patch or in a losing patch. It's funny, with other strategies, I felt nothing, when people lost. Or maybe I had a bit of FOMO or jealousy when people are on a winning streak. But it is different, when you're actually doing the coding, it's like, whoo, it's a big responsibility. I take it very, very seriously. So I spend a lot of time backtesting, retesting my free time. But I think we've really hit the mark, and I'm really happy with the way version 4 has come out, the way it's doing, and the feedback we're getting has been really, really appreciated. So thanks for the feedback, and always want to thank those that sign up in the beginning, our beta testers. It was very rough, version 1. It didn't last, it only was a few months until we went into version 2. But I really thank those who signed in earlier and have been through us this whole journey. And of course, those who just joined, awesome too. You've come to a way more refined indicator. And so with counter trend, it's almost like a paradox, because our indicator is called TrendForce, our community, our strategy. But there are counter trend signals that plot. So remember, they are turned off. The default, you need to turn them on. So we do need to remember that trend is your friend. So when you are trading a counter trend signal, the language I like to use is that you are trading into oncoming traffic. All right, so you got to remember that you're trading into potential areas where the trade could bounce back and go the other way. And so it is hard often to tell the difference between a pullback from the current trend or reversal, because sometimes counter trend signals will plot and it will only be a pullback, and other times it will be a reversal. So maybe I'll just share my screen if I can, Ty, and hopefully this is going to come out loud and clear. There we go. And we're just going to look at some examples. So it's all about counter trend, just moving your wonderful faces. Whenever I click share screen, then I've got to clear my screen. So let's just go. This is the NAS. I'm just looking at the NAS for now for a reason. I'll tell you why. But you will see from time to time, so here was a counter trend signal. Clearly, that was not a reversal. That was simply a pullback. And if you do scroll along, you will see some of the counter trend signals are pullbacks rather than reversals. So it's important to understand that you can't just click on every counter trend signal. You will get in trouble if you do that. So I will try and help you tonight with what's a reversal and to tell a little bit of the difference. But the key thing too is, we have kind of mentioned it. We haven't mentioned it really explicitly. It's kind of been hinted at that the counter trend signal was never meant for higher time frames. So generally, the signal is way safer on lower time frames. In fact, often the lower the time frame, it's the opposite of other signals. So the lower the time frame, the more accurate it can be. So generally, I only take counter trend signals on the 1 and the 3. But if you trade the 5-minute, that's fine too. And the 8-minute too. So sometimes the reason why we have them, we could just code them out. So they only appear on the 1, the 3, the 5, and maybe up to the 8. But the reason why we've left them in is because of our now signal table. It makes sense because if you're on a trade, in a 15-minute, say you're in a sell, for example, and you've taken a sell signal, and you're in the trade's moving, and then suddenly the 8 says counter trend, a strong counter trend signal, the 15, even the 1 hour, that's happened to me. That's a sign not to, go to those time frames and take them, but that there's like bearish pressure or bullish pressure. So we've kept them in all the time frames, but I really want to say that, it's really designed initially just for the lower time frames. The 1 and the 3 are really, really great. So just remember that. Then I'm going to talk about a lot of things, tonight. So just to keep your ears pinned. So how they're plotted, So, there are two kinds of signals. There's bright and dark. And so the coding is way more complex than our buy and sell signals. So the buy and sell signals were easier to code, where the counter trend have a lot more going for them. So there's a lot of, I'm not going to give all our secret sauce away. But tonight I'm going to share one little tip that I haven't really shared before that will help you, especially if we're going to look at just these two counter trend signals tonight. But I mean, the way they are plotted, that if they are bright, it means that not only, well, let's say the big difference between version 3 and version 4 with the counter trend signals now, our counter trend signals won't plot unless you clear the 3 times higher time frame. So we can see this is a bright counter trend signal. Was it's clear, there's our 3 times higher, we're above that. And the reason that becomes way safe, and here too you can see this counter trend signal plotted because we're below the 3 times higher. And so that gives a lot of safety, because you can see if you're above and there's a pullback, this zone, any zone that's higher than the zone you're in, is huge for support and resistance. So we can see, well, this one had a good run up, but we can see it pulled back, and what happened? It pulled back into the 3 times higher zone, massive support. It kind of kissed it again, and then up it went. So the signals generally are safer in version 4 because we're above the zones. And the reason was because, counter trends can pull back, and these then give us huge support if they do pull back. So here we didn't pull back, we kind of just mowed it down. But this one, there was a pullback. It did come, after target. But just to remember that. So the signals only plot now if you're above 3 times higher for the buy, the bullish or the bearish ones, you're below the 3 times higher. So, and again, if they are bright signals mean that the MACD is also turned over 3 times higher. So that's quite massive. We love the MACD. We always rave about it almost every training session. So with this signal, we can see we've cleared 3 times higher. And plus we can see that our 3 times higher MACD trend zone is also bullish. And here's a great example. It's bright because here it's already bearish. Very seldom will the 8s have crossed over because the counter trend signals are trying to get in early, at the start of a new move. So we can see the 8 hadn't crossed over here, and neither had the 8 crossed over with the signal of here. But that's not essential for counter trend. It's not like our golden setups, but still they do run, So that is basically, how they plot. Now, there's obviously other little bit of secret sauce there, but the key is they are designed. The key thing in doing the coding for the signals, they're designed to plot with momentum. That's a real key, because when you're doing counter trend, obviously, I do take some. I prefer to take, the with trend buy and sell signals, but they're designed to come with accelerated momentum. So when they do plot, the idea is because they counter trend, you try get yourself into a break-even position very quickly. So almost every single time I take a counter trend, I very seldom just, lag my stop loss, at the original place. As soon as I take the trade, of course, I lock it in and I choose my take profit target. If it's not the TP1, I will choose another target. And then very soon, then the next thing I do, I just keep my mouse on my stop loss. And I try get into break even as soon as possible. Now, obviously, like that, you sometimes will get a pullback and you will get stopped out. But I've very seldom taken a loss on counter trends. Most times I will at least take a few pips, but I very seldom take a loss because I get into that break even position very soon. I don't do that with normal buy and sell signals. I'll be quite patient because I trust the indicator, I trust the decision I've made. But of course, counter trends can, because you're trading into oncoming traffic, they can swing around very, very quickly. But again, the coding is designed there's a whole lot of stuff there that's designed to plot the signal with accelerated, momentum. And so again, with every counter trend signal you get, you'll see the problem is the table is not going to look all green or all red. So generally the zone alignment will mostly be orange. Now it does depend, some of the higher zones could be in the favor. So, obviously this is the current situation, but if you have a counter trend signal, the 1 and 3 may be orange. But look, if the high time frames are for example, this case green, bullish, that can mean a lower risk, and the same for a sell. In this particular counter trend signal, again, most of the low time frames would have been orange, the rest could have been red. But keep a lookout, because if you got orange, that's why that plot, we're between our main zones. If the rest of the table is in your favor, there's a good chance that those trades are going to run. It's when you get a counter trend signal and everything except maybe the 1 minute is the wrong color. Those are ones that are risky. So again, I just really love the force table. Helps us not only trading with trend, but also for counter trends. I'm always looking. In fact, what I do, if I'm trading with sometimes I trade with just the 1 minute on my big screen or the 3 minute. I blow this thing up. There is the option to make it large. And I find I treat it so seriously. I sometimes, if I'm in a big screen like this, I will blow this up to large so I can keep a track on everything that's happening, with the MACD and the trend zones. And so, let me see, I think I've covered that. So I want to just mention some secret sauce things. So things I haven't said before, but things to look out for. So these were two very strong counter trend signals. Look at this one. This one, how many pips did this drop down? That was 140 pips down to the 987. And although this one did pull back, it would have opened up. That's still, this, even if we just take it from this, did fly up 58 pips, pull back, and then of course it moved along. So this is a real secret. When I see this, I am pretty convinced that it's going to reach TP1. So there's two things to look for. The first one is, look at this, is how close the signal is to the first bright bar on the histogram. So if you can remember that, that is going to get you taking good counter trend signals. So I want to say that again very slowly. How close the counter trend signal is to the first histogram going bright. So we can see when that happens, you tend to get a nice rush up. All right, because this is measuring, momentum. So I value this, especially on high time frames. So, especially the 3 minutes, one of our secret sauce. So here we can see we had a counter trend signal, and can you see that came on the first bar of the histogram? And that almost guarantees you, boom, you can get into a break-even position very soon. And then often, not every time, but you can see, look at these wonderful, with Heiken-Ashi, these wonderful bullish candles. There was hardly any hesitation. Beautiful, no dojis, right up to, and how much, what I say, this was sort of 50, 60 pips in that signal. We can see again, look at this counter signal, counter trend. It's bright, because we also 3 times higher MACDs crossed over. But look here, if you look, what do we see on the histogram? That signal came on the first red bar. So that's the thing to keep a note of, that when you see that happen, and again, look at this, how this thing ran down. If you took this and followed the white candle rule, you could have, taken this right down. Let's just see if you took this, you followed the white candle rule, there was still, almost 100 pips. You would have stopped out there if you chased, with Heiken-Ashi candles, chasing the top of every bar. So if we just look back, we can see, for example, this one went nowhere. Obviously, this is a bit rangy at the moment, but we can see that signal plotted on the third bar, the third bright bar of the histogram. This one plotted on the fourth bar. This one moved a bit further. We can see that actually plotted on the first bar. Look, obviously high risk with that there, but there was still 15 pips. So keep a lookout. When you get the counter trend signals, you will find the ones, the closer that plot to the first red bar. This one plotted on the second one. That's okay. There was a move there. Let's just look back. This one had a bit of a move. Look, this one was in the first bar. And that one, although dangerous because we're obviously the 233 is in the way, but if you look back, look for where the first bar, obviously there's range during the day. Let's just see if there's any other examples here. Just going back, we're going to come back. So we can see here's a good example of a bad example. So take note of this. Here we got a counter trend signal. Now it's bright because you can't see. Let me just get our... It's bright because the 3-minute has crossed over. But look here. Can you see where it's like 1, 2, 3, 4, 5, 6, 7 bars after the histogram went bright, that plotted. Now, obviously, there were a few pips there, but that probably wouldn't have reached TP1. So always be counting, looking. Let's see if there's another example. I'm just looking at random examples. That one's on the third. Here we go. That one's on the fourth. That one did move, but a pullback. But keep an eye out. Keep an eye out for how many bars. Let's just get back to this example we're looking at. How many bars back? Let's just go to today, to this. There we go. We were here. Count the bars. So when you find a signal on the first bar, that often means pips. And also look, another thing to look at is this is now the opposite. So the closer to the bright, the better. But also the further away from the crossover, 3 times high, the more likely the trade's going to run. So we can see this is bright because we already crossed over on the trend zone 3 times higher. And this crossed over, how many bars? 18 bars it had crossed over. So the MACD is telling us we're in a downtrend. This one was not as close. It was, a few bars back. It had crossed over. But again, this is like the trend is already established. So keep a lookout for those things. All right, but again, just thinking about the philosophy, taking counter trend signals once you, and I'll give a lot more tips, so don't worry. It does boil down to your philosophy of trading. I know, we always say our time are very different. I don't take many. The last one I took, actually the crossover, this crossover here was exactly on the signal. So that told me the 3-minute was crossing over on the signal. I jumped in and got some pips. So that crossover also important. But I say the philosophy of counter trend is they are risky. Need to understand price action, and that's what I'm going to focus on a little bit later. But the key is you probably will, this is the thing, this boils down to philosophy. You're probably going to make more pips, but you'll also make more losses. And so that's something you got to weigh up. Some people don't handle losses well, so they prefer to kind of maybe err on the side of caution, but others, more gung-ho. They don't mind getting stopped out a few times, and they'll catch the big runs that are counter trend. So again, it's just your personal style and personal philosophy. So again, I think I said earlier, don't take every signal. Because one plots doesn't mean, it's going to run. So rather see them as opportunities. They've got to be seen as opportunities. They do take more analysis and prepare too, So, obviously we had a big, for example here, we had a big move down. We've obviously, hit a strong area of support, the 987. Clearly we are going to be counter trend moving up. A signal is going to come. So I would be preparing. So if I was looking for a counter trend signal, I wouldn't be thinking, oh, there's one, and suddenly kind of wake up and start thinking, should I take it? No, be prepared well in advance if you're going to take it or not. And we'll look at some things that can help us. And so what lessons, this is the main thing I want to focus on tonight. So what lessens the risks for counter trend signals? The first one I would say is market volume. Though when there's volume in the market, that is a real key that they're probably going to run and be successful, get you into profit, reach TP1. Now remember, TP1, we've set it in the indicator. You can choose. If we go down to counter trend signals, let's just scroll down. I've probably gone past them already. Where are they hiding? It's been a long day. So where are they? Show counter trend signals. Sorry, up here we go. Counter trend signals. Take profit. I've set it at 1.5. So that's the standard. Now remember, it doesn't mean you have to close the trade at 1.5. But the reason we've put that there is its relation to the 233. So one of the rules is if the take profit is on the wrong side of the 233, we tend to discourage people from taking it because the 233 is normally the first target for a pullback from a counter trend. And so generally price respects that. If we just have a look, it didn't happen here. And there were reasons for that. We'll come to that. But you can see our price came up. There was a lot of retesting around the 233. So we like the target for counter trend to be for a buy, a bullish counter trend. We want our 1.5 to 1 to be inside the 233. So just remember that. But volume is key. So let's just have a look at examples of ones that failed. So look, here's a counter trend signal. This was at 10:30 this morning. Obviously, it's a time of low volume just before the close of the afternoon session. But remember now, if we put on the replay function, let's just see what market volume was like on the signal. So we'll just let the indicator just reload. Can you see the volume was pretty low? Look at the volume here. So from the value area low to value area high, we can see it was only 33 pips. If we just press play, let's the signal pop off. So there's a signal. So we can see, look at the low volume over here. So let's see if that has changed. I mean, 32 pips for the high and the low. 70% of the volume is only in 33 pips. That is a no-no. And so again, we did the trading. If you missed the trading last week, please look. We've added the value area high and the value area low, extensive training. That immediately tells you volume is low. So when you see a signal like that with low volume, that's not a good idea to take that. If we, for example, go down here, let's look at the volume. So let's take our replay bar further back. What was the volume like on this counter trend signal? So is there going to be higher volume? We'll just press play until it plots. And boom, there we go. Okay, look at the volume here. So the volume with this signal, there we go. There's like 100 pips. So 70% of the volume is 100 pips. So you can see that was 3 times higher than what there was in the afternoon. So let's have a look. What was volume doing here on this signal? Let's just pop it right on there. And let's wait for that to reload. Let's get that signal to pop. And boom, there we go. Where are we? Okay, that was quite tight. Interesting. That was we had been in range. So that maybe was not a good idea there. So still 50 pips. Okay, still way more than the afternoon. We're going to come analyze these two signals in a minute. So let's just close that. So just be aware, low volume. So especially in low volume, let me just close it off, low volume trading times. So if you went throughout the afternoon session, so are we live now? Yep, we're live. So if you look at is there a counter trend signal in the afternoon? Here's a counter trend signal. Let's just take a random look. There's a counter trend. Should we take that? Let's just put the replay bar over here and see what volume was doing on that signal. So let's press play, get that signal to plot. So there we go on that. I mean, look, look at the volume here on this one. So from the value area low to value area high, there's only 22 pips. So just be aware of that. Look at the volume, and especially volume times. Especially I would not recommend, counter trend signals on the Dow and the NAS, in the afternoon. I mean, then you can look at maybe gold would be safer, and of course, the JPN 225, the Nikkei. All right, but let's have a look at some other rules. So we look at market volume. And also there must be some free space. So if we just go back to this morning, these are 2 good examples I want to focus on. I mean, the main free space to look at, is the space to the 233. That is the key. So I would never take any counter trend signal unless there was a good gap between the 233. So in this case, from the signal, it would have plotted a bit low, but take it from the close up to there's good space. I mean, there's 36 pips, that's great. There was space there. Over here from that signal down to there's 28 pips. That's a good gap. But if we look at some of these other signals, I mean, this plotted right on the 233. No way. I wouldn't touch that. It's on the 233. I wouldn't touch that. It's on the 30 again. No space. I mean, there's a little bit of space here, but this is more, not a lot of volume there. 14 pips, probably a little bit risky. I would like to see at least 20 pips on the down, the NAS. Yeah, definitely not going to take that. No space. So if we look, let's just go back to some more volume. Let's find one. Can we find one with more volume? Okay, there. Where are we in relation to the 233? We're miles below, but of course that pulled into the 8 times higher. So just be aware, look for, is there space to the 233? You see, there was one further back here, I think. Over there's a counter trend. Okay, that one had a big pullback. I mean, there was a bit of space. We'd have to sit through the pullback. So we look at the 233 is the real key. Is there space to get there? Because the highest probability is that price is going to hit the 233 from above or below, depending on whether it's bullish or bearish. And then often it does reverse off that, or there's a huge pullback. All right, so we look at free space. That's another key. Then, I mean, one of the keys is, has price, rejected a key level? So this is what I look at. So I would not consider taking a trade, a counter trend, unless I know price had rejected a key level. So I don't want to go through all of them. Let's just analyze this one first. So we put our replay bar. Let's get it on the signal. What happened there? There's the bar. Let's get on the signal. Okay, that looks better. And we're just going to press play. And we're going to get our signal. There we go. Our signal to plot. All right, so this one came obviously at a time of high volume. This one was plotted. So the key thing to look at is rejecting of a key level. And the key then is obviously every signal would have probably rejected some level. The closer you are to a key level rejection, the higher the likelihood that that trade is going to reach its target. So, I mean, in this case, the TP1 was pretty close. It was on just inside, which is great, 26 pips, not to be frowned at. But I'll say it again, the closer the signal is to a rejection of a key level, then the higher the likelihood that that is going to move to target and go beyond. And so let's just have a look at these two signals in relation to key levels. And that's kind of the main thing. I mean, I've got about 7 little points. This is the main one. So is there a key demand or supply zone or resistance or support zone that price has rejected? So we can see here immediately, yep, price hit a high at the top of this trade. So obviously price moved from the open. I took this trade on the 3-minute this morning, and price came up to a level and then began to drop off. And we can see, yes, it has rejected a resistance zone. That's number one. What else has it rejected? We can see it. You can see the value area high. I know it's not always clear. In fact, what I'll just do, let me just make that thicker. So now on the Zoom, with transmission and things, I'm just going to make that really much thicker. Let's take it up to 3. And that should make it a little bit more visible. Okay, that looks a bit too ugly. Sorry, I'll just take it back to 2. I'll chop it back. More editing for Ty. I don't know, he loves it. All right, so we can see here, we've rejected. You can see exactly the bottom of a resistance zone we've rejected. We've also rejected the VAH, tested it, especially if something is tested at multiple times. Look, it spent how many minutes here at this level? These are things I look for. It spent 12 minutes on the 1-minute chart, rejecting that level. We can see, and I'm going to actually come back to this. Next Tuesday's trading is going to be quite practical. I'm going to look at dealing with the noise on charts, how to clean it up. And I'm going to talk about the R4 and the R3. This is an absolute key level. In fact, this was my target this morning, but it fell short. But I did close the trade before, just fell short. But I knew it's a magnet for price action, but more about that next week. So it's rejected a zone, it's rejected the VAH. It's also closed below the R4, which is a key level. Plus, it's also below the POC. Then also, we can see here on the signal, we got this lightning bolt. It had closed below. This would have been a support zone, would have changed color on there. And plus, it's just hit and moving through the VAL. Now, remember, when I said last week, when trades move between the VAL and the VAH, it's said to be imbalanced. But once it breaks, it's in balance, and those trades tend to run, which is what happened here. So also big round numbers we can see here. This is why we can see 25.5. It hit that big round number, but there was momentum, high probability it was going to break through, especially when you get the signal on the first red bar. Boom. We also had on the bar before, look, triangle down, and these are very accurate. You got, they don't plot very often, triangle down. So there was a lot of stuff going for this trade. So other things we can see here, and this is a key too, has it broken through a trend line? Look at this. At this point, we can see that the indicator plotted a trend line. It had broken through a trend line that was plotted basically from before the open at 318, and it broke it. The signal had broken below. Obviously, the closer the better, but still, we had also broken a trend line. And so if you think what was stacking in the favor here, there was a lot of things, broken below that big round number, trend line rejection. It was breaking the VAL. Obviously, we target the POC if we're on the wrong side, but here we're below the POC. And then also, I've turned off my drawings, but this is the real key. I haven't even checked here. Have you rejected any key levels? I don't think it didn't reject anything that I had on my chart. I'll just click them on and off to see what disappears. No, only lower down. But still, we can see this made the signal very strong. So I'm always looking for I call it my 4-hour drawings. So obviously I do the daily stuff, a daily fib and daily trend lines. But honestly, I wouldn't consider taking a counter trend signal unless I knew what was happening on the 4 hours. So I tend to look at those, and I've seen huge moves when price either rejects key levels from the 4-hour chart that I plot, or it breaks a trend line. So we can see there was a lot of things taking place on this particular signal that hinted that it was probably going to move quite strongly. The other thing I do look at, so I haven't planned this. Let me just see. I don't know what I've got on my other screen. Let's just see what was happening. Let's just go to, let me change this. This is not on the NAS. I want to change this to the 8-minute. Now, this may not always happen, but what I look at, was there a reversal pattern on this trade? So what time is this? We'll be looking, what's going on here? Cash, NAS 100. Let's just have a look what was happening on this particular trade. So here we are. Yeah. So this is what I look for too. That's why I like keeping an eye out, because what we see here, look at this. So we had this is the move from the open. So it moved up, 60 odd pips or so, or a lot more there. Was at the open. Am I in the right place? Yep. But look at this. Can you see what's happening over here? At the top of this move, we can see the classic Heikin-Ashi reversal pattern. Let me just close this for distracting. Can you see you got a bullish, doji, bearish? So that's a classic pattern for a reversal. So again, this is hinting that we're taking a counter trend signal. This is not a pullback. So I would look at this. So how do you know if it's a pullback or reversal? Well, what is happening on the 8-minute? Or you could also look at the 3-minute, but I found the 8-minute is very good for this. So this is a good example. We have this classic bullish, doji, bearish, which indicates this is a high probability that this is not going to be short. This is going to be quite a big move down, because we've got this reversal pattern. So keep an eye out for that one. Keep a look. And also breaking a trend line. So again, if I was trading now looking for a thing down, I would definitely, let me just blow this up again. Let's get back to just a 1-minute chart. I'm definitely looking, I'm always drawing trend lines non-stop. While I'm trading, I'm looking for every excuse to draw a trend line. We can see here, we broke a trend line from over here. There was a pullback, another pullback. There was a low there. We made a lower low. And so that would validate drawing a trend line. We can see we've broken, not only have we broken one the indicator's plotted, but a more recent one, we've also broken a trend line, meaning price is likely also to drop. And again, we also look, the key thing, another point, what I look for, this is not too clear on the 3-minute, maybe clearer. I'm also looking for chart patterns. I mean, we can't say this is a head and shoulders, but because this kind of spoils it over here. But we have got like a high there with a shoulder. Then we've got a higher high and a lower high. And so there's a bit of structure. You could also call it, almost a quadruple top, a triple top, a multiple top. It's not a clear pattern, but I'm also looking for patterns. And so whenever there's a pattern, I'm also looking to see if I draw a trend line to me validates the pattern always. And so we can see this what made this counter trend signal a higher likelihood that it was going to drop a long way, especially the 8-minute having that pattern. And then if we just play this out, we can see how price just fell off a cliff. And you can see it stopped around R1, and then it kept moving down. Boom, we can see there, if we just pause for a second, it broke through the 15 minutes. We can see that plotted over there. And where's price? There was a pullback, and then we can see where price eventually settled, came down, to the 987. So let's just stop that for now, because we've made the main point, and let's look at this other signal. Now, let's just let it play out. There's a pullback. You can see how it rejected, the value area high. It pulled back, the value area low, was over there, rejected that. We can see again rejection, and that took it down all the way down to the 987. So let's just stop that for now, and we're going to analyze the signal going the other way. So where is price? Let's get back to the bullish signal. So these are great examples. So we're here. So this is where we are positioned. And so this was another great example to look at. So if we just look at those points in relation to this, we're looking at rejection of a key level, and this is even better. So these are things that I look for. We often use the word like a cluster. If there's a group of key levels together, then it makes it a high probability reversal and not just a pullback. And so we can see here, I just always got to love price action. So let's look at some of the key levels. So let's just put on the indicator to have a look at the POC. Sorry, put on the playback. Let's go to the replay and let's start new. Let's get our bar on the signal. And again, let's analyze what is happening on the signal. So I'll just run it to the signal. So again, here we go. So we can see, wow, this is great. This is what made this signal a really good signal. So let's first look, did it reject a support zone? So here, yes, there was a support zone here. We can see when the signal plotted, this support zone is telling us that there are buyers waiting down here ready to push price up. So firstly, there was a support zone. And again, look how close, we're fairly close. The closer the signal is to any rejection of any level or line, the higher likelihood that trade is going to move. So again, there was a support zone that plotted with the signal, and we're pretty close to that. So we get a tick there. So were there any pivots? There weren't any pivots. So we did have a pivot there. There weren't any pivots, but very often there's often a cluster, a daily, weekly, monthly. There are no pivots in this case. Was there a big run number? No, we're not really close to big run number. 300 was way down. We didn't have that one. Was there a trend line rejection? We can see not one the indicator plotted, but again, if I was looking to take a trade back up, I'm constantly drawing trend lines. And here we go. I love it when this happens. We can see we've rejected that trend line. When you could have brought it lower down over there, that would also be invalid. You always want at least 2 touches. Yes, on the signal, we had rejected a trend line. So that's another tick. That's what made that a strong signal. So then we got to look at our value area low, value area high. Look at this. Look at these. Now, there's more than one thing here, but look how we rejected the value area low. Numerous times we can see, if we just blow it up a bit, this is a great one to look at. We can see sometimes the tips of the wicks are clearly only touching the value area low and rejecting. That's a big tick. And what is great, very often counter trend signals plots when we're below the POC. So when you get a counter trend signal above for a buy and below for a sell, that's a very good chance that it's going to move up. So I can tell you now, just looking, when especially we've got, I touched on this last week, when you've got the value, the POC closer to the VAL than the VAH, I can guarantee you that's going to be a B pattern. So let me just get let's just pop this on here, put on the fixed range profile, and let's see what was happening here. There we go. Look at that. Can you see this B pattern? So when you have this B pattern, normally if you have like the bell curve and the volume is equally weighted with jutting out in the middle, then you'd have the POC in the middle. But this is a good sign. Look at this. We've got the counter trend signal above the POC. I knew just from experience we're going to have the B pattern. That's good. A signal above the POC way down there. Cool. That gives a lot of weight to that. And so what else? We're looking at and by the way, this is also called fading the market. I don't know if I covered that last week, but when price rejects the VAL in this term for a counter trend, it's called fading the market. We've rejected the VAL. We're also above the POC. Boom. We're fading the market. We are taking a counter trend based on entering close to the VAL. And so also, now this is the other key, looking at, again, I said I wouldn't take a counter trend trade unless I knew where the key levels were on the 4-hour chart. And again, look at this. Look at what's happening here. This white line, this is a 4-hour trend line. Price broke. That is always weighty. And again, always looking left, we can see, look at the respect over there for this 4-hour trend line. Again, look at the respect over here, Then it broke down, came up, tested it, rejected it. And then look, on the signal, you're breaking a 4-hour trend line that is massive. And again, it's not so clear. This almost looks like this yellow line, almost looks like a parallel line, but this is a daily trend line. So I do my 4-hour trend lines in white, daily in yellow. Look, I mean, this is crazy. To the millimeter, price kissed my daily trend line and rejected it. And then, of course, we can see I've got this funny color. I still want to change it, but I'm trying to find a color I'm not using elsewhere. We can see how price tested this level. This was a key level on my 4-hour chart. And again, over here, I mean, I just love price action. To the millimeter, price hit a 4-hour level and rejected it. And so if you add all of those things together, that was massive. I haven't looked at this one. Let's just see if there was a doji bearish bullish. I don't think there was on this one. So we're looking at the 8-minute. No, so there were two dojis. There was bearish, doji, but we can see there was a nice bullish candle. Let's just see if it would have come into play yet. No, not quite yet. But again, look at this. On the 8-minute, price pulled into 8 times high. So this is the 1 hour. So price from this reversal down on the 8-minute, price pulled into an hour zone. That would have been equivalent to 1 hour, 64 minutes. That's got a lot of liquidity. The higher the time frame price pulls into, the higher likelihood that price is going to move up. So we didn't get that bearish doji bullish, but we did get, sorry, that's the 8-minute. Let me get my 1 minute back. But I know I'm spending a lot of time on this because I don't want people to take risks on counter trend trades. So if you look at this one, these were, great examples. We've broken multiple trend lines, rejected trend lines, rejected key levels. Was there a particular shape here? No, there's not really a double bottom. I can't see head and shoulders. So there wasn't, a chart shape to look at. But
there are some patterns, I promise.
Okay, is a descending wedge. What do you call this one?
falling wedge.
Falling
Now,
wedge.
page 63, guys. Page 63 in your system
Okay.
2.0 PDF. And the interesting thing is, I mean, and you're going to see it more when you ignore those wicks. But if you're looking at how all those candles are closing, just bring it up higher, Dad, and it kind of cut through the wicks, but kind of close it on the bodies. Bring that right-hand side of that trend line up. No, I'll keep the, well, yeah, but either
Sorry,
way,
what?
yeah, that's fine, but just bring the right side up, and you're going to see it more if you, yeah, and then you can then bring the left-hand side up a bit, whatever, but you can see that price is compressing in a wedge, and when you're getting those lower lows, not a flat, so that is a different pattern. I would drag it down a bit lower still. But there is a difference. Yeah, a little lower. You get to see as many touches as you can in there.
Yeah.
One wick throws it out a little bit, but that is a descent, falling wedge. And then if you look at the other counter trend one you had before that up top, the one that broke down, that's your rising wedge.
Yeah.
Essentially. It's very, very similar. Like you've got this compression happening up the top. It's not quite. You've got to have a higher. You're making higher highs, so I would start it where you closed your trade today, like the far left.
Oh yeah,
across from there to the highest highs, and then you basically you can kind of see you've got a prices compressing. You're getting higher highs, but they're not getting much higher.
Yeah,
those lows are coming. Yeah, you can kind of get the picture ish.
Yeah,
but if you turned off the indicator completely, you're going to see those patterns even more clearly. Yeah. And how price is basically just starting to compress, and then bang.
Boom, off it goes. Shot, well spotted, Ty.
All good. Very, very cool. I'm loving this. You said so many things tonight that I maybe haven't even caught before. Even maybe I didn't quite capture it last week when you were talking about VAL and VAH or the POC, just how, even what you said earlier, because Nikki asked the question about, measuring it on gold and just how just to look and see, like it's one of the biggest indicators of range, basically, is what you're saying. When they're close together and seeing low volume, it's a huge warning in itself. But very, very cool. Back to you.
Yep. So, I think that was kind of basically my last point. And look for space. The other thing is there's a contradiction in what I'm going to say. If there's space between, the 3 times high and the 8 times high, that's good. But also, if they compressed, I remember we looked at it weeks back. I don't know if I can find an example for a counter trend. I haven't, obviously, you've got to find it when there's a bit of volume. But when the 3 and the 8 overlay, let me just turn the drawings off just to clean it up. I just flick back to see if I can find an example. I should have maybe found one and dated it, but I haven't for a counter trend. But sometimes the 3 times higher overlays the 8 times higher. Here's not a good example, but it's kind of this kind of look. So look at this counter trend signal here. I would like it more compressed, but when you get a signal, a counter trend, and these zones are almost one over the other, that's compression. And we love that. That's when a lot of the times those trades move. I can't find an example, but with now in high volume, I'll just go back. I won't waste any more time looking. I'm trying to find when they overlay, and you're getting compression. You're getting, I can't see one quickly, but I think you understand what I'm trying to say is when they overlay each other and you get a signal and price is above, you've got like almost triple support or triple resistance. And if price does pull back, it's pulling back into like a wall, like a solid, I just can't see one now. This kind of look. So, not the best example, but when they're overlaying, this kind of compression, and you get a counter trend signal, it's counter trend. You may just be on the wrong side of the 233, but all the zones are overlaying each other. Boom. Those are ones to look at. So I think that's all I've got to say tonight.
Very cool. Do you want to jump over to the NAS? Marcus has noticed a couple of things over there.
I'm on the NAS, yep. So,
sorry, there we go. I was just...
Live? Do you want to go to live?
Yeah. Earlier he was talking about I'll read the full question. This is going back 10 minutes ago. Would the NAS right now be an okay example, rejecting a cluster of levels, including 987 and R3, and then right now having a 5-minute and 8-minute CT signal? So there you go. So where are those levels? I'm just looking. 987 and R3. Okay, there's R3 breaking through that and
Yep.
breaking through the 987. Yeah, so that
I
um,
mean, I'd have to look at high. I mean, I would always look
I'm already just
at
seeing a higher time frame double bottom almost right there across.
yeah. So I'm looking at the eight
Well,
here.
okay, yeah,
We
pretty
into
red.
we're into the like on the this is the 8 minute. Let's look at the 3 minute. I mean, that's we've got a counter
There's a bit
trend
of
signal on
space
the
now
eight
that it's
minute.
under there.
Yep, no, that is space, you know. I mean, the zone alignment, where's the 2584 here?
Lower.
There we are. We still, you see, that's still risky, but we've got, that means the other EMA is in the way. But again, we can see here, we've got the opening range plotting here. That's a magnet for price. Price often comes back and revisits. And so how many pips away are we right now? We are, 15 pips, call it. So we've broken below trend zone. But I mean, look, it is messy. We got some orange and mainly green. Look at these. I love this. We got counter trend signals popping off. I personally wouldn't take that because, look at this. We've four green, two orange, which means that thing could hit anything and bounce the other way. So let's just look at what the
And there
three.
will obviously be some orange
Yeah.
when you're looking at counter trends.
There always be. But yeah, we got a sell. Look, we got a sell. We had a sell signal broken below. So yep. I mean, look, I just don't like all these. That's very counter trend. It's we got four green. So we above the major trend zones from the
Yeah,
500 up.
and London. Can someone? I think Marcus is putting in there. London's opening in 5 minutes. If we check
Yep.
time zones
Oh
and
yeah.
things.
Gee, don't enter before
Yeah.
before an
So
open. That's
hmm,
so. I mean, look,
yeah.
I'm quite conservative. We still got to, let's just go back and see what the table was looking like at this bar over here. So let's just go back to the signal we were analyzing earlier. So I'm quickly going to pop this on replay. Let's get the bar, see if I can just pop the bar and start new. Let's just have a look on that signal. What was the table like? Probably would have been quite a bit red, I would imagine. Yep. So mainly orange look there. So that's not too bad. It was, yep. No, still very bullish, but again, it's counter trend. That's why you're not going to find it the right color. So on the bar, yep, still you can see I love that. When you're in a trade, when you're in a counter trade and you start seeing those lights pop on. That's what I love about this table. It gives you great confirmation, that the trend is moving in your favor. See, we're almost at a comedy. I spoke for so long, so I get so
That
carried
was
away.
loaded. There
I
was
get
a lot
so
in there.
carried away. I just love
But that
this.
was cool. I loved how you
Yeah,
referenced, obviously the POC and the
yeah. The
VAL and
VH and the
VAH.
VAL.
Yeah, like it really brings it in even more so now when you start noticing
Yeah.
range and etc. And yeah, very cool. I mean, this is the thing, guys. If you're new, this is the only they carry more risk. You have to see a lot more to take one with confidence. And if your win rate is not great, then just ignore them altogether because you're going to have to be very quick on the button, like Dad said, to move that stop loss to break even,
Mm,
to protect it, and realize you're probably going to take more knockouts for break even that
mm,
way potentially. And they're there, but these are not the home run type of trades half
mm,
the time. It's just if you're more experienced and you've seen price come down to a zone where it's likely to reverse from,
mm,
it's just a nice indication of what you're seeing of price
mm,
action and structure. And it gives you an entry that way. But that is a bit more advanced. It's not an on-trend signal as such, but it might be potentially continuing back on a
mm.
higher time frame trend. It's just the lower time frames have dropped below the 233, like right here.
Yeah.
I mean, there's a lot of orange on that table right there.
Yep.
But you might get a lower time frame counter trend signal,
Yeah.
which is potentially getting back on the higher
Yeah.
time frame trend. So
But The,
that's where that
the great thing outside, there was no red, after a huge move down on the signal, there was no red.
that's good.
Yeah. So that's means,
You're going to naturally have some orange, but at least you're not having a
yeah,
red.
yeah,
So you're in between things, but you're not as much underneath things.
yeah. And just again, look at the rejection of lines or breakthroughs. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, almost, and the zone, there were 10 things. This signal there were 10 things that made that signal a good signal to take. And if you took, we looked at some random ones. If you took, for example, let's just close this. We'll just leave here. Let's just get this on, and I'll close with this. And if you took one of these random, if we took, let's just take, where are we in range in the day? If we took that counter trend signal, I can guarantee you wouldn't find 10 things that price had rejected to produce that signal. Maybe there's one, so
Yeah,
again,
really good.
so look for those things. I know that it's a lot of technical things, but for counter trend signals, I want to be really sure that this one's going to move. So I'll hand back to you. I'll unshare my screen.
Super
and
good.
You can wrap it up for the night. Thanks for joining us,
Love
guys.
Very, very cool. Well, guys, that was counter trend signals. If you're brand new, there might have been a lot of things to take in there. Like we only went into the detail of POC last week. So again, there might be even a lot for you to take in general, just looking at everything in TrendForce turned on. So I often have conversations with people that if you're starting to just get familiar with things, especially if you're new, turn as much, that's why we have a lot of things set to off by default. So the counter trend signals are off by default, and there's a few other things that are off as well, just to make it as less cluttered, as little cluttered as possible. And then as you begin to get more familiar with bits and pieces, turn more on. I often turn everything off. I'm looking at price action. I'm seeing how price is moving up and down, because sometimes you're too busy looking at trend zones and moving averages to realize, like, oh my goodness, we've actually got this amazing double bottom or double top or falling, rising wedge and descending wedge, etc. All the different pretty hallmark patterns that are there that we don't want to be distracted from seeing. So really cool. And remember those key points. I'll have all of this typed up and put into the notes on YouTube after the fact, once you're watching this, if you're watching this later. But loads of info in there that was absolute gold. So Dad, thank you for prepping all of that.
There you go.
Otherwise, guys, yeah. Dad, you got another last thought? Otherwise, we'll be live analysis. We're giving Thursday mornings a go. So we were originally Thursdays. We did Fridays for a while, going back to Thursdays. So we will be on Thursday morning, 5:30 a.m. We'll drop that link in the group chat. Otherwise, guys, trade safe, and we'll see you soon.
Thanks for joining us. Have a good night.
Good night.